Have you ever tried to read a table like this one? Of course, if you are new to the stock market, at first that might seem a bit complicated. But guess what? That's exactly what we are going to talk about in today's video. Let's do it.
All I hear, go get the money. So I go get it. Hate means I do something right.
My favorite website and usually my first options when it comes to look for stocks is Yahoo Finance. But of course, there are different types of website that you could use, such as Google Finance, Seeking Alpha, Market Watch, etc. What I want you to understand is that you usually are going to find the same parameters as the one I am going to be showing you in today's video. I have Yahoo Finance open, and for this example, I am going to be looking into ExxonMobil Corporation, ticker symbol XOM, which is trading in the New York Stock Exchange, and it is part of the NASDAQ index. So the current price is 80.79. There is a 0.26 variation, representing 0.32% variation from the previous price. Previous close represents the price at which the stock closed in the previous session. What I mean by this is just the last price the stock had in yesterday's trading session, which in our case was 80.53. The open represents the price at which the stock started trading in today's session. Right, so you probably might be thinking, how come it closed at 80.53 and when it opens, it opened at 79.86? What happens is just there is this what we call the post and the pre-market trading. Some stockbrokers and some exchanges allow people to do trading after the market hours, right? So there are people trading pre-market and there are people trading after the market closes. The bid represents how much you as a buyer are willing to buy that stock at, which in our case is 80.97. And the ask price represents you as a seller, how much you are willing to sell that stock to, which in our case is 80.98. So for stocks with good liquidity, usually the spread between the bid and ask is not that much, right? As you can see right here at ExxonMobil, it's just 0.01 cents if I'm not mistaken. The day's range represents the price variation within that trading session, which in this case is its lowest was 79.63 and the highest price was 81.77. The 52-week range represents the lowest price possible within 52 weeks, which is usually the year for trading sessions, and the highest price was 83.08. So it's like within a year of trading, that was the lowest price and that was the highest price. The volume usually represents the amount of shares trading in that day. So in this case it's 24,181,311 shares of ExxonMobil trading in today's trading session. The average volume, I guess this is for year, right, represents the average volume being traded. So that's the average for the year, right? So if you're gonna find some websites where they put average volume in parentheses 3M, which represents 3 months. So that's the average for that 3 months, right? So in our case, this is the yearly average. So now, market cap. ExxonMobil is a big company. He has a market cap of 343 billions. So just as a recap, the market cap is just the product of the current price to the number of shares outstanding, right? So it represents a big company with such market cap. The beta, we have 5-year monthly. Beta usually represents the volatility of the stock, which means that the lower the beta, the less volatile the stock is. In this case, ExxonMobil is 1.15. It has been fluctuating a lot because of the oil price. You know, ExxonMobil is an oil and gas company. So whenever there is oil price variation, that might affect, of course, the share price of those oil and gas companies. PE ratio, which represents price earning ratio, usually tells you how much you are paying per how much the company is earning. So to understand better what is the PE ratio, you need to understand the earning per shares. So the PE ratio is actually the ratio between the price, the share price of the company, to the earning per shares, right? That's what we have, 5.39. So if you want to understand what PE ratio is ideal for the company that you are trying to invest on, you usually need to look at the average PE ratio of the industry. If the PE ratio is usually higher than average, that means that the company might have a competitive advantage compared to the other companies in the same industry. So you want your PE ratio to be as close to the average or a bit higher, not too high, but a bit higher than the average PE ratio of that industry. The earnings dates represents the date at which the company is going to report or has already reported the earnings of the company. So be aware that usually whenever a company is going to report their earnings, that might affect the price of the company, right? If they report positive earnings beating the consensus, then usually will mean that the price is going to go up. But that's not always the case, of course. This is just what most of the times happen. Of course, if they don't beat the consensus, right, they report negative earnings or negative numbers, of course that will affect the number in a negative way as well. Forward dividend and yield. So the dividend is what the company is going to pay you for being a shareholder of the company. I know that's awesome. Just remember, not all company pay dividend. So in our case, it is $3.52 per year, and the yield is 4.37%. So if you multiply this number to 80.79, it will give you somewhere close to 3.52. Some companies pay dividend in a quarter basis and others pay in a semester basis. So it depends on your company or the company that you want to invest on. And again, remember, not all company pay dividend. The ex-dividend date. So if you want to be able to collect your dividends for that following quarter, you need to make sure that you buy the stock of ExxonMobil, which is our case, in February 9th or before February 9th. So if you buy it after, you might not be able, or you will not be able to collect the dividend for that following quarter, right? So the ex-dividend date tells you the limit at which you can buy the stock and be able to receive dividend. When your target estimate, guys, I usually don't look at that number, right? Because it's just an estimation. It doesn't tell you that the stock is going to be at trading at that price within a year. It tells you what they think it is going to happen. But you cannot time the market. You cannot time the price of a company. You can have an idea based on the fundamentals where the company is going to be trading at, but you honestly cannot say where the company is going to be trading at within a year. So it's just estimated, right? Estimated value gives you an idea, but don't take it as written in the stone. In the right, you have a chart where if you want to have a better illustration of the price variation with time, you can open the chart, just go to full screen and see how the company has been behaving within the selected time frame. So guys, I hope this video added value to your time. I honestly hope that you are going to be able to read stock table from now on. And if you like the content, please share it, like the video. And if you would like to watch more videos like this one or any stock related video, businesses, please subscribe to my channel if you are not yet subscribed, and help me grow this channel, guys. See you guys in the next video.